Hello everyone. This topic is related to both GS paper 2 and GS paper 3, governance and economy. So, uh, revenue budget versus capital budget. Article 265 of Indian Constitution says no tax shall be levied or collected except by authority of law. Means for the government to take any tax from the people, there should be a law that mandates for doing so. And we know law is made in the parliament. Parliamentarians are the representatives of the people. Article 266 says no expenditure can be incurred except with authorization of legislature. See, 265, no tax shall be levied. 266, no expenditure shall be done. Both with the authority of the legislature. Article 1112 says President shall, in respect of every financial year, cause to be laid before Parliament annual financial statement, that is, receipt and expenditure of Government of India in a financial year. President shall in respect of every financial year. So this is an annual case. The document is called Annual Financial Statement, which we lovingly call it as budget for the Government of India in a financial year. Currently, the financial year for Government of India runs from 1st April of this year to 31st March of the next year. So receipts and disbursements are shown under three parts in budget. These three parts are consolidated fund, contingency fund, and public accounts fund. As specified in the Article 266 and 267. We can broadly divide government budgets into two parts: revenue budget and capital budget. Revenue budget comprises revenue receipts of government. What are the various forms of revenue to the government? Tax revenues and other revenues, and expenditure made from these revenues. What are tax revenues? Means taxes, duties levied by the central government. What are other receipts? These are interest and dividends on the investments made by the government, and fees on the services charged by the government. Revenue expenditure is for normal running of the government department and various services. Interest payments on debt previously taken, subsidies given. Broadly, the expenditure which does not result in creation of assets for Government of India is treated as revenue expenditure. Means for daily day-to-day working of the government, whatever the expenses they have to do and whatever the revenue they earn, it is called revenue budget. All grants given to state government, union territories and other parties are also treated as revenue expenditure, even though some of the grants may be used for the creating of assets. मतलब जो खर्चा कर दिया और जो वापस नहीं आना है, grant, that is called revenue. That will be termed from revenue budget. Capital budget. Capital में सीधा सीधा आप याद रख लीजिए capital, संपत्ति. It consists of capital receipts and capital payments. That is loans raised from the government, from public, called market loans, borrowings by government from RBI and other parties through sale of treasury bills. Loans received from foreign governments and bodies, this like UN, IMO. Disinvestment receipts like sale of any PSUs, recovery of loans earlier given from state or UT or any other party. So capital payments consist of capital expenditure on acquisition of assets or selling of assets. Assets can be land, building, machinery, equipments, shares. Now let us see Article 112. 112. It requires annual financial statement to be presented in the parliament. So, statement 1, it it says revenue account and capital account. And statement 1A, from revenue account, a receipt will be there and disbursements will be there. Similarly, for capital account also, receipts and disbursements will be there. Both the disbursements from revenue and capital account will be presented in the budget as demand for grants that shall be voted in the parliament, and it will be charged from consolidated fund. In statement 1A, that is disbursements, these are charged. These are not voted in the parliament. Salary of some officials, salary of president, these are charged in the Consolidated Fund of India, CFI. No voting is being done. Salary of some judges. Second statement, statement 2, is regarding disbursements from Contingency Fund of India. We maintain contingency fund for some emergency provisions. Statement 3 is receipts and disbursements or some you find from duties also. It's from the public account. So we have earlier seen that there are three types of fund: consolidated fund, contingency fund, and public account fund. What is an example of public account fund? Suppose you buy a post office receipt, you are or Sukanya Samriddhi scheme. You are depositing the money in the government piggy, but that is not going to the consolidated fund, because one day government has to uh, give you back this money. It was yours money only, so government takes it as a liability in its public account. Thank you.